Good morning, everyone. Welcome, welcome. It is March 27th, 2023, and today we have a few different things to talk about. We're going to talk about how this week might shape up. This is the last week of March before we do jump into February. So let's see what we got cooking from there. Realistically, I think just the headlines. Remember last week we talked about Jerome Powell, we had the FOMC, we had a bunch of that stuff. And what we saw overall was dip buying, realistically, just dip buying in the market overall. Every drop was getting picked up by the rally, and we ended the week fairly strong. So the thing that I saw about that, we'll talk about the levels and whatnot into the end of the session, but there wasn't that much of a volume presence when dips were getting bought. Realistically, I think that the bid is still fairly weak, and the troubles that were talked about in terms of the financial sector and the banking sector are still fairly high. There is a liquidity issue. There are other banks that are on the brink of seeing that failure, just like we saw the three past banks over the last few weeks. And Jerome Powell did mention that it's a little too soon to see how the monetary policy is going to affect these measures and what steps are going to be required to help these areas out. So he's still fairly high on the uncertainty aspect and is still looking to subdue inflation as the primary uh, goal of monetary policy and the Federal Reserve before looking to take a step into what is going on with these banks. Realistically, there's still a lot of uncertainty around that, and Yellen's kind of talking about that in terms of deposit and liquidity issues. If this does get out of control, the Fed is probably going to use a lot of tools available to subdue this whole crisis. Now, that's the majority of the information that we got. We also got that there was going to be only one hike left into the end of the year to keep us at 5 to 5.25. And realistically, what else we have is a lot of different Fed members are looking at different dot plots to end the year. So keep that in mind as we go forward. We're going to see how the probabilities change for rate hikes and rate cuts into the end of the year. So far, no rate cuts are expected, but there is going to be rate cuts expected for 2024. So in terms of the banking sector and financials, that's going to be the main focus. I still think for some time to come before we do get a little more information on that and how that kind of shapes up. But what it looks like is this overall market is taking to still the dip buying side while a lot of this is unfolding, right? First Citizen Bank, ticker symbol FCNCA, has agreed to buy Silicon Valley's deposits and loans, confirming an earlier report that surfaced on Sunday night. So the purchase of $72 billion in assets will come at a 23% discount of $16.5 billion, while approximately $90 billion in security and other assets will remain in receivership for deposition by the FDIC. Equity appreciation rights in First Citizen Bank shares, common stocks with potential value up to $500 million will also be received by the FDIC, which entered into a loss share transaction with the lender to absorb commercial loan losses and minimize disruptions to the sector. In pre-market, the FCNCA shares are up about 22% to about $715 a share. So the 17 former branches of Silicon Valley Bridge Bank National Association will open as First Citizens Bank and Trust Company on Monday, March 27th, 2023, and customers of Silicon Valley Bridge Bank National Association should continue to use their branch until they receive notice from First Citizen Bank and Trust Company that conversions have been completed to allow full service banking at blah blah blah. So a lot of names here. The extra costs will be determined when the FDIC terminates the receivership. So we'll see how that kind of shapes up. But they're absorbing that. It seems like a lot of the big banks are going to absorb a lot of these regional banks if they do go down under. The deal marks um, the latest chapter of the current global banking crisis, which began on March 10th when SVP became the biggest U.S. bank failure since the collapse of Lehman Brothers in 2008. Shortly thereafter, Signature Bank, SBNY failed. Credit Suisse was rescued by UBS, and things are looking rocky for FRC, First Republic, and even Deutsche as of late, as investors and analysts alike assess if something deeper is brewing. While bond traders have radically shifted expectations for monetary policy, deposits have been drained from smaller banks and transferred into big institutions, while policymakers from Janet Yellen to the Fed chair have also sought to assure the public about resilience in the US financial system. So, again, we're going to have to see a little more information on that, how this thing shapes up this week. I think there's going to be news that does circulate this week, especially. Um, in terms of other news, it doesn't really seem like we have too much. We're going to start the week with some news that comes out on Thursday and Friday. We have the Fed's favorite inflation number on Friday, the PCE figures that we're going to look at, and we also have the final GDP quarter over quarter that's going to be presented to us on Thursday pre-market. In terms of other things that we have Fed's Jefferson that speaks today after the bell at 5 p.m. Other than that, looking at this market today, we've seen a decent little rally. We're above a few distribution blocks. We're above the 3990 distribution block, which is sustaining a lot of this upside in the market. We are fighting at the brink of the 4025, let's call it. Start of a distribution block that opens up into 4045, which I think that again, this bit doesn't seem that strong to me. I think there's going to be some kind of sell pressure that tries earlier on in this week. We'll see how that kind of shapes up. But again, keep that in mind. I'm going to be looking for some shorts if we do manage to reoffer under 4025s, see if some of those sellers do come out and see if prices do get trapped into that 3990. Otherwise, the next real short is probably going to be at 4045, where I think those areas are going to try to get defended before we get into that new distribution block to the upside. Dip buyers are going to look at 4005 realistically and 3990 into that region. They're going to want to try to save the market from that area. And like we've seen time and time again, a lot of these dip buyers are sustaining right on weaker bids, in my opinion. So with that being said, I want to welcome you all to community.tradeproacademy.com. Go check that out. Check us out. We're going to trade live every day, and I'm going to jump into the live room very, very shortly to talk about different opportunities. So I hope everyone does well. Start the week off. Be very diligent. Let's see where we go from there, and I hope everyone has a great Monday, and I'll talk to you guys tomorrow. Let me know in the comments. Do you have any questions? What would you like to see in these updates?